all. I am Nitish Bajaj. I am the CEO of Consumer Healthcare Business for Piramal, and I am joined here by Anaga Deshpande, who is our Head of Finance and IT. So today I'm here to share with you our exciting journey about our consumer healthcare business, which is one of the fastest growing consumer healthcare companies today. And it's also on an exciting journey of building an organization which runs on the tenet of a FMCG organization. Now, before I go into that space, I would want to quickly take you through the OTC industry per se. Yeah. Now, OTC per se, you all understand the market. It's over the counter, which means consumers have an ability to self-select. Either they decide on their own before they come to the retail environment, or they choose the product on their own at the influence of retailer and not on the prescription of a doctor. So this is the market we are talking about, and this market has multiple segments. If you look at the context of India, this market is very large. It's about $7.5 billion market, growing in the past at a CAGR of more like 8 to 10%, ahead of the industry, ahead of the GDP growth rate of the country, and it's also expected to continue to grow at a rate of 8% and become an $11 billion industry by 2030. Now, that's the space we operate in. Why is this market very attractive? Many of you would know the reasons, but some key things which we think differentiate and makes this industry attractive as a space to play in. One, of course, as a country, we are a very, very young population. Our median age is 28 years, among the lower in the emerging economies. If I contrast it to a country like China, there the age is closer to 40 years. US is also in a very similar spectrum. And there are, of course, countries like Japan where median age is 50 years plus. So we have a young population which is consuming class and makes this industry very attractive. Second, there is an increase in disposable income of our country, which means there is a greater influence. And this audience, because the penetration of healthcare, OTC healthcare especially, has been low, is actually going to spend more and more on their health and well-being in the period ahead. So that's also driving the growth of this industry. What is also working in the favor of this segment is, if I look at overall penetration of consumer healthcare in the country, it is much lower versus many other emerging economies. If I contrast it to China, for example, it's about 1/3 penetration versus China. So Chinese market is, with a similar population, is 3x of our market size. What is also working good in this segment is the retail landscape, the change and transformation we are seeing in this space is also going to drive the self-consumption in a big way. We are seeing emergence of modern trade pharmacy. We are also seeing emergence or growth of e-pharmacy in this segment, and e-commerce in the overall wellness space also. And these are also going to give an environment which is very conducive to self-select. So that's the key segment in which we are operating. If you look at our business in this context, now today we have a business which is close to 1,000 crore business. It's a very self-funded business. We started this business in 2008. At that time, the business had just about 3 brands and total business size was less than 100 crores. Over the journey of last 15 odd years, we have been able to take this business to a sizable portion of about 1,000 crore. And today we have, between the brands which we distribute to the market, the number exceeds about 25 plus brands today. So we have been able to add a very, very strong heft to the portfolio, and our sales have also grown rapidly. What is also very important is, while we grew at, let's say, a CAGR of about 15 to 17% over this entire journey, our growth have been accelerating in the last few years. So last 5 years, if I have to specifically look at, we have been growing at a CAGR of 23%. So we have been investing to rapidly grow this business, and that growth strategy is delivering very good results for business. In this phase of growth, we have also, of course, handled many challenges which the industry saw during the last few years, like FDC regulations came in, like there was COVID environment which came in the past. We also went through the changes of GST implementation, demonetization, and more recently, we also had a price control coming on one of our products, which is IPIL. But all these, let's say, headwinds, we have been able to navigate well and make sure that we continue to grow ahead of industry rate through this duration of journey. Right. Now, Just to give you a quick flavor of the space and the brands we have. So I've talked about we distribute about 25 plus brands. If I look at within these brands, now, first of all, these brands sit in very, very attractive OTC segments. Some of our brands, and I want to talk about one or two of them specifically, are actually going beyond the OTC pharmaceutical space. They actually get into the area which we call as wellness, which means they are not only talking about solving the, let's say, the disruption in their routine life, they also build a more wellness and more personal care, hygiene kind of approach. So if I were to talk about lactocalamine as a brand, it sits in the medicated skincare segment, but we have positioned the brand more as an oily skin expert, which means we can offer multiple solutions to our consumers. And some of you, if you have spent time outside, you would have seen the kind of range we have been able to build on lactocalamine as a brand. We are today offering to consumer multiple solutions for their oily skin, more in the area of proactive maintenance of skin and not necessarily only solving the skin issues. Similarly, Littles as a brand which we acquired in 2015, that brand started as a feeding range of brands, but today we have expanded the brand into get into hygiene space in a big way. So we were the first company really to start advertising on baby wipes as a segment. And then we entered into a diaper segment, and today we have fairly strong endorser which is supporting our brand. And this brand, through this journey, we have been able to make the number one selling brand for the company. And of course, we have many other brands which sit in this very large industry. What is important for us to think is each of these brands, if you look at some of these brands are leader brands, some of the brands are challengers brand, through the combination of a very holistic mix of some very strong brands where we get a heft in the trade environment and also some challenger brands, we get the context or ability to keep gaining business through two sets. One is the industry is growing, so we get the growth of industry. Second, because we have an opportunity or a headroom which is much larger, we are also able to deliver growth via gaining share in the market. And that's what is really driving the accelerated growth for our portfolio. If I look at the segments where we are operating, that segment, because it's a beyond OTC pharmaceutical space, that size of market is more like a 8.5 billion space where we are playing. And that's what makes this business very attractive for us. Now, what are we doing really going ahead? I think there are our overall ambition, and we have talked about that ambition earlier also. You have seen the numbers. Our overall ambition is to take this business to $200 million plus business. But more importantly, we are now getting into a phase of balanced growth where we'll also focus significantly on driving profits and EBITDA margins. And we would want to take this business to double-digit margins by end of FY30. And how are we going to deliver this? There are four key levers, and I'll talk about in details later, but just to give you a quick snapshot. One is build scalable large brands, which means we have started to identify the brands which have shown promise, very fast growth. How do we scale them and make them very, very large brands in sizes upwards of 100 to 500 crores? So that's one key lever. Second is, because our brands operate in a space which is beyond the pharmacy space, because they also get into grocery, general stores, self-select modern trade stores, how do we become an omni-channel company? So we are looking to expand our distribution in a big way. Third, we are seeing rapid growth of our brands in the e-commerce portfolio. And e-commerce, as we know, is one, of course, an experimentation ground for launching new brands. It also gives us quick trials of our product. We are also, because we have been able to establish many of our brands in the e-commerce space, we are now looking to embark on a journey on where we would want to improve the profitability of this channel and make sure that feeds into the profitability of the company overall. And all of this initiatives which we are taking, they are also backed very strongly with a very strong tech backbone and analytics backbone, which drives the execution or rigor of our sales organization at one level and also gives them insights which can drive the productivity of the organization. So now getting into the details of this, I think I have talked about the brands. Our aspiration is to make many of the, so there are about 7 power brands which we invest on today. When I say invest on, they are invested on mass media, on television media. We invest them on the digital space. social marketing space, we will continue to invest on these brands. And our ambition is to take each of these brands and make at least 5 brands which are in the right size of 100 crore plus, going up to a 500 crore brand also. So that's one direction which we are putting very clearly in terms of building large mega brands. Each of these brands have fairly insightful communication strategy, which is leveraging insights from consumers. And also some of these brands are endorsed by well-recognized celebrities. So that also gives us an ability to cut through the clutter and also build a trust, which is very important for a healthcare category behind our brand, and hence drive choice. So that strategy of using insightful communication, which connects with our audience, having the power of a celebrity endorsement, which builds the trust, we will continue the journey in the period ahead. And more importantly, we are also expanding the appeal of the brand by getting into multiple new formats, which gives our consumers many more new occasions, many more new formats to use the same brand. And it also improves the ROI of our investment, because once you build a mega brand which gives you multiple offerings, and then these offerings can also ride on the parent equity and hence build us greater choices, greater joy of our investments. So that is what we are going to continue on building our power brands. How we have done in the journey over last 5 years, if I have to give you a flavor of last 3-4 years, we have been investing significantly on our media, typically investing 15 to 18% of our top line on brand building. And as we have grown scale, very important to notice, while we have continued to spend aggressively, our operating leverage has actually improved, which means our ratios are improving. We are spending more. We are continuing to spend higher on the brands, but our top line to sales, advertising to top line ratio is actually coming down. And that is very important, because that is what is going to drive profitability as we build the scale of the brand. We also talked about the power brands. If you look at our power brands where we actually have invested, so while as a company we invest about 17%, 15 to 17%, the dominant part of that investment goes behind 7 out of the 25 brands. These brands are actually growing much heavier, much stronger, and they are actually growing at a CAGR of 32%. So if I look at the journey of last 3 to 4 years, these power brands have really accelerated the growth of a company. And these have also benefited a lot from innovation strategy, because in the horizon of this last 4-5 years, we have also launched multiple new products behind these brands. Many of these launches first came in the e-commerce channel and are sitting today in the e-commerce channel, but having qualified them in the e-commerce channel, today we have also an ability to scale many of these innovations in the traditional channel. So that's the way we have built this brand, which is what is also creating a firepower for us in the business to continue growing, accelerating ahead. Now, I want to spend some time on our innovation strategy. And as a company which is in the OTC healthcare space, it's a very balanced growth strategy. What we do, of course, innovation strategy is linked to FMCG tenets. We have a very strong marketing team which identifies insights from the consumer, is doing a lot of social listening, understanding the global trends, and hence identifying which products can be fit on our portfolio. We have a very strong in-house R&D team, which is then able to crystallize these insights, ideas into products. We also have a very strong network of third-party partners who help us innovate. While we work with R&D, we also have a bank of partners which also bring ideas for us to explore and build in. We launched these products on e-commerce. Why we start that journey is because e-commerce is one channel where you could launch multiple products in a single way. If you go into a traditional trade, you can't really launch more than 4 or 5 products. But in an e-commerce channel, we have an ability to launch 40 to 50 SKUs, maybe 20 to 30 products in a single year behind multiple brands and learn. So we launch these products, we learn what is working, what is the pricing strategy, promotion strategy, how do we really need to position it in the context of consumer. And through these learnings, we develop the successful ideas. And these successful ideas, then we gradually take forward. Many of them first get into modern trade. Some get into traditional trade, but in a regional geography. And once we qualify the product in a regional test launch, that's when we really take it national. This strategy gives us a very, very measured approach to scale up business without putting business at any kind of financial risk. Second, it also makes sure the equity of brands is much more effectively managed because you are launching a product, learning, and only the successful launches are scaled up at a much higher level. And that strategy will continue going forward also. However, some tweaks are being made because if I look at our last few years journey, our last few years journey was a lot more building the portfolio and making it competitive, which means we were competing, for example, on a brand like lactocalamine. We were competing with brands which already had a fairly large, stable portfolio of beauty solutions. Today, we have already come on parity. So today we have variants, we have multiple offerings like sunscreens, face washes, wipes, etc., sitting and making this brand competitive as an oily skincare solution. We are now transforming the journey to get into the next stage where we are launching many unique, innovative first to market product. For example, on lactocalamine, we very recently launched a three in one mask, scrub, and face wash. So it's a single product which gives a unique benefit of use it like a scrub, let it stay on like a mask, and then wash it, and it's a face wash. So giving such innovative offerings to consumers coming from our own R&D expertise is the next stage of journey which many of the brands will see. Having said that, there is still an opportunity for some of our brands and portfolio of sizable large opportunities which are yet to be tapped. That journey will continue. These are typically, let's say, differentiated offering, but in a very large space which already exists. So that journey will continue. And third, because we have a very strong marketing inciting team, which is looking at global trend, which is looking at social media listening. And today we are seeing in many spaces a lot of ingredients and new solutions are coming, which are consumers are latching onto. So we want to really keep picking up on those trends and be able to fast to follow and launch these offerings to consumer fast, much ahead of competition. Right. Now, coming to the channel space, and I think this is an important area for us. I did talk about our brands. If I look at these brands, do transcend beyond the pharmacy channel. So, historically, if I look at our coverage, we are very, very strongly entrenched in a pharmacy channel. We have one of the strongest direct coverage of pharmacy channels in the context of pharma industry where we operate in. We cover 180,000 chemists directly, and each of these chemists are on our mobile platform. We understand the full buying behavior history of this channel because we have a fairly strong, robust tracking mechanism of this network. We also have built a strong modern trade, and when I'm talking modern trade here, it is organized modern trade, which is your modern trade pharmacy like Apollo, MedPlus, Wellness, Noble, etc. kind of outlets. We cover them directly again, and we have a dedicated account management structure which goes and services them. We also cover the hyper super modern trade like DMarts, Reliance, etc. also. So we do have a very strong presence and network which covers, and that's also what differentiates us from many other pharma companies because those capabilities are very restricted more in the domain of FMCG environment. We also have built over last 4 years, and my colleague Anagha will talk about it, an e-commerce business. In these 4 years, today we cover almost every e-commerce portal directly, and that's another strength which we have as a business. And in last 2 years, we have also gone direct to our consumers. We have a platform called Verify.in. I would encourage some of you to experience it, where people can buy our own portfolio directly and we service the products directly. It gives us an ability to, one, direct all the traffic because we do a lot of digital advertising, direct the traffic to our own platform, and also get insights directly because we know the database of consumers. Then we can build a relationship and make sure that we are also able to market our new products directly to these consumers. And today, this platform does about 8,000 transactions per day. Now, each of these platforms, again, for example, our sales organization operates on a mobile platform. We have built in cutting edge technologies there where we are able to do guided selling. We are able to do neighborhood selling. For example, if I understand this chemist is selling particular range and a nearby chemist is not selling, we are able to guide our sales organization to drive distribution based on the proximity behavior. Similarly, when we look at getting analytics based insights, so there is a very strong ecosystem which we have built in house where we are able to identify specific productivity improvement measures for our field force and our sales organization, which also helps and makes sure that we are fairly agile and are able to respond to improvement of productivity and efficiency of our sales organization. Now, going forward on this channel, so this is our current state, the shifts which we are making. One is today we cover about 2,000 towns directly, and our coverage is more in the area of 100,000 plus population town. We are going deeper. We are building our network, and this journey we started last year, where we are now going to below 100,000 pop strata town. We are expanding our distribution through a super stockist network. And this is very similar to an FMCG environment where we are building a network of supers who service sub and allow us to service smaller towns without having, let's say, the load of managing small orders. Because typically, as you go smaller towns, the distributor buying capacity becomes limited. So you build a network of super who services sub, and through that expansion, we are able to take our town coverage from today about 2,000 towns to 3,300 towns in the year going. So we are expanding in one dimension of that. Second, because many of our brands like lactocalamine, like Littles, today also get the category also gets consumed beyond the chemist channel into a traditional trade of grocery, general merchant, and cosmetic. We are also expanding in the 2 to 3 years ahead to build a network which covers general stores, the non-chemist stores, and we would want to build an equal parallel organization. So today we cover about 180,000 chemists. We will build out our network to get into more like a 350,000 chemist and non-chemist coverage, which will help us create a much better availability of our product. Second, when you invest on media, it also ensures that through those investments, we are able to get a much better ROI of our investments because consumers will have a greater accessibility, availability, and a much better choice. Third, in the area of modern trade, I did talk about that we are covering the organized modern trade. We are also seeing emergence of a standalone modern trade. When I say standalone modern trade, these are more entrepreneur-led modern trade, but not a chain, which means in my own neighborhood, somebody may have opened a self-service store which operates like a modern trade, which means you have an aisle where you could walk through. We are also now building a coverage setup for these modern trade. And as we speak, we have set up a team which goes to cover about 3,500 such standalone modern trades. And we'll keep expanding this network. Today, we exist in about 15 towns, but this expansion will also continue. The biggest reason for doing this is as we invest on our power brands, and two of our power brands, which I talked about, Littles and Lactocalamine, we do want to make sure that this omni-channel strategy is truly omni-channel, and we are present in the wider network from where the consumer actually consumes our product. And once we invest on the media, the consumer also has greater accessibility and a greater opportunity or ability to buy our products. So that's on the building our network. Now I would like to invite Anika to talk about our e-commerce channel.
Good evening. I'm Anika Deshpande. I head finance and IT for the India Consumer Health business. I'm going to talk to you today about the e-commerce business, which is one of our success stories. Since its inception in 2019, this business has grown exponentially. And we have seen tremendous growth coming from this business in the last 3-4 years. This business also gives us a differentiation from other pharma companies in India because nobody else has the kind of cohesive processes that we have for the e-commerce business. In the last 3 years, we have seen this business grow by 58%. The contribution to revenue of this business has also grown from 10% in FY21 to 20% last year. We are also present on almost all the major e-commerce platforms and uh, all the leading e-commerce platforms through a dedicated account management process. This channel also allows us to be a good platform for testing our new products. So we launch our new products on e-commerce as a strategy. If they are successful, we then scale them up to other channels like general trade and modern trade. So going forward, our focus is to drive profitability of this channel. And there are three things that we will do to improve the profitability. One is enhance margin through better price realizations, focus growth of high margin products and platforms. As we establish the products on e-commerce, we plan to reduce the A cost, the advertising cost to sales ratio, and thereby improve profitability. And we will do this by leveraging our own in-house analytics capabilities. We are also developing our own self-service or self-fulfillment network, which will help us connect better with the consumers and also reduce our distribution costs. So to sum it up, taking from what Natisha said so far, we are going to be a $200 million company, a consumer healthcare company with a double-digit EBITDA growth by FY30. We plan to do this by scaling up our power brands to the size of 100 to 500 crores by focusing on innovation and advertising. We will scale our products to expand our coverage to top-weighted general stores and grocery stores, which will improve the access of our products to our consumers and improve our return on investment of consumer acquisition. We will continue to drive growth in the e-commerce channel through better product and portal mix, through optimizing our A-cost ratios, and also improving costs on our own distribution. All these initiatives will be backed by a strong tech enablement and our in-house analytics. Thank you.